Okay, let's take a look at the U.S. stock markets. Investing in these markets, you're going to find out that historically they are considered the best long-term investment vehicle. We're going to look at the four major markets: the Dow Jones Industrial Average, the Nasdaq, the S&P 500, and the Russell 3000. When you look at the Dow Jones Industrial Average, you probably see it on the news at night in the business section. It is the most closely watched benchmark made up of 30 major U.S. companies. The Nasdaq is comprised of over 3,000 companies in the technology and growth arena, and these are issues that are both represent the U.S. and companies abroad. The Standard & Poor's 500, or the S&P 500, this represents the top 500 U.S. publicly traded companies, and this is considered a bellwether for the U.S. economy. And then the Russell 3000 is the fourth one that I wanted to cover, because this index is comprised of 3,000 U.S. companies representing approximately 98% of the investable U.S. stock market. So if you were to follow or invest in the Russell 3000, you would have a very diversified portfolio. Now, investing for your future will be over a long period of time, and there are risks. There's the risk of losing money over the short term, but over the last 80 years, the stock market has returned, on average, around 10% per year. But when you look at individual years over that time period, historically, 1 out of every 4 was a down year in the market. Here we're going to take a look at a number of years for the Dow Jones Industrial Average. The years are shown along the bottom, 2000 to 2012, and the percentage increase and decrease is shown along the left of the chart, showing that, for example, in 2000, it was a down year. The Dow Jones Industrial Average lost 6.18%, whereas in 2012, it was an up year. The return was 7.25% positive. Here's the same time period and the same statistical information shown for the Standard & Poor's 500. This shows you the Nasdaq, much more volatile. The lows are lower, the highs are higher, but the market is moving once again, never moves in a straight line. And here is the Russell 3000, which when you compare all four and overlay them, you'll see that the Russell 3000 kind of smooths out the curves, doesn't go as low as the low, doesn't go as high as the high, but goes somewhere in between. An interesting infographic.